I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the VinnyGMarkets channel, brought to you by Vinny G Money. So in this channel, we're going to look at different long-term and short-term strategies on how we could capitalize on these markets. It's very important for us to start paying attention to the financial news and what's going on financially. Inflation is going out of control. Unfortunately, the only way to keep your money up with inflation is through the stock market. It could be done through gold and silver and other different precious metals. I don't have enough experience in that to be talking about those things, so we're going to keep it with the stock market, and even the crypto market too. So what we're looking for in the stock market when it comes to short-term goals is we're going to look at the 10-year yield, the US dollar index, crude oil, and the Federal Reserve balance sheet. We'll go over what we need to see in 4 of those different things. Long term, we're going to be looking into companies that are tied into the 4th Industrial Revolution. Some of you might be asking, what the hell is the 4th Industrial Revolution? We'll get into that further, definitely in more videos, but that's basically the economic and world takeover of robots, algorithms, AI, drones. That might sound a little ridiculous, but we'll pull up all the proof to prove you people wrong on why that's where we're heading long term. We're moving into a digital life. I'm not saying whether that's the right thing, wrong thing, or where we should be heading. I mean, actually, it's definitely not where we should be heading. But we're going to look at how to invest and make money off of this, because the NWO plan is just the NWO plan. All we could do is try to play the system, not have the system play us, and we're going to try to make money off of this. So those are going to be our long-term goals and strategies, looking into companies that are tied with that whole thing going on. Short-term, we're going to be looking into selling options. If we're bullish on the market, we're going to look to sell puts. If we're bearish on the market, we're going to be looking into selling calls. Most of the people, when it comes to options, deal with buying options. We're going to look into selling because time decay is going to be in our favor, and that's just a better way to make passive income, which is what we're looking for short term anyway. And other short-term strategies which people might have tried is day trading or swing trading and things like that. Let me tell you, unless you know exactly what you're doing in those and you have the time to spend, it's just going to be difficult to make money that way, especially passive income, day trading and swing trading. I really feel that selling options is just a better way. I'm not going to go over how to sell options. There are just many other better people on YouTube that could explain that. Even me, I'm just learning myself. So this is going to be a learning experience for all of us. I hope people try to follow. We're going to try to make some money here short term. Long term, we got that on lock. We know what to follow, the 4th Industrial Revolution, companies in that. We might take hits, but long term, I'm talking 3, 5, 10 years. We're going to be kicking our feet up and chilling, definitely in the minimum 10 years. To all you young bucks out there, let me tell you, even 10 years, that 10 years goes quickly. If you're 20 and I could tell you kicking it at 30, that's a good deal. If you're 30 and I could tell you could kick it at 40, that's a good deal. If you 40 could kick it at 50, that's a good deal too. You know what I'm saying? That's early retirement for most people. Even beyond that, what are you doing anyway? You might as well keep your knowledge up financially, make that money, and at the very least, leave it to your next generations. That's really not a bad deal. So let's get right into it. Short term, we're looking at the 10-year Treasury. When we pull that up, this is the most important thing we're going to be looking at. Everybody's claiming there's going to be a market crash. This is going to be the main indicator that's going to tell us when the market is going to crash. Once this 10-year U.S. Treasury starts spiking, that's when we need to be precautious. It could be viewed at different ways in the past, but how we're looking at this now is our economy, where in the United States at least, this is a consumer-based economy. Our economy goes up when people are spending more money. That U.S. 10-year Treasury, the lower it is, just the easier and cheaper it is for people to get money across the whole spectrum. So as long as this stays stable, Even if it's going down slightly, going up slightly, that doesn't matter. If it stays the same level, we're going to stay bullish on these markets, because these markets right now have been doing nothing but hitting higher highs after higher highs after higher highs. And if everything keeps going the way it is, that's pretty much how it's going to stay. We're going to follow this trend. So this 10-year Treasury, though, if we see this have sudden spikes, that's when our alarms are going to go off. If it stays at this level right now, 1.255, and you see it's been going down over time, we're going to be good with that. The fact that it's been going down over time, that's the reason why the stock market has been able to grind these higher highs right now, and also the reason why it's been giving these crypto markets a reason to breathe. It's because it is low U.S. 10-year Treasury. Once it starts spiking, then that's going to raise concern, and we could start look at selling calls as opposed to, selling puts. So the next thing we're going to look at is the U.S. dollar. This is important too. This actually has been rising, which is why I would say in these past 2 days, if you see the spike right now, within these past 2 days, we saw a slight pullback in the stock market, even if you want to call that a pullback. But the higher the U.S. dollar, the markets don't like that, because the higher U.S. dollar it is, the more expensive it is to buy assets. The lower the U.S. dollar, the more cheaper it is to buy assets. So a lower U.S. dollar means it takes more dollars to buy things such as stocks. So naturally, the price is just going to go up. And as you can see, the dollar has been going up, but that 10-year yield has been staying stable. So that little pullback in the markets, those 2 days midweek this past week, that is what I would call a fear trade, and these are things we're going to look at. If we see that U.S. 10-year Treasury staying stable, the U.S. dollar going up slightly, but the market really, pulling down, we're going to look to sell more puts, because we're going to buy these dips. That's how we're going to play these markets short term. The third thing we're going to look at is the price of crude oil. Crude oil, the higher the prices in crude oil goes, the higher the markets are going to go. The reason why is these investment banks and different banks, they're heavily invested in crude oil. So when crude oil goes up, the financial market goes up, and the energy sector goes up with it. So within those two sectors going up, it's going to pull the rest of the stock market up. The stock market has been going up anyway, even though crude oil has been taking a hit. But to see anything significantly move higher, this is what we're going to need to look at. So we'll keep an eye on that as well. The fourth thing we're going to look at is the Federal Reserve balance sheet. People, the Federal Reserve runs everything. You could do your own research on that or take my word for it, but that's just basically how it goes. So the Federal Reserve, as their balance sheet increases, that means it's just more money supply into our markets. Inflation is going to go up. They could blame inflation on all these other things. The reason why inflation is going up is the amount of money that we're printing. 20% within the past year of our total money supply. That's just insane. And that's why you're seeing these financial markets go up. So until we see that change, we're not going to change our bullish view on these markets. The reason why these markets, again, have been going down a little bit is because the talk of tapering from the Federal Reserve, but I need to see that before I believe it. The Federal Reserve right now is buying $80 billion worth of U.S. Treasuries every month. That's the minimum. There is no cap. We can't even see the amount. They go over the cap. And $40 billion of mortgage-backed securities. That's the reason why the real estate market right now is going crazy. And that's the problem. I think if they do taper, they're going to taper back on those mortgage-backed securities, and you're going to see real estate possibly take a hit. But the next Federal Reserve meeting, I believe, is in September. We're going to watch the Federal Reserve like a hawk, and what they say in September. Any talk of tapering, these markets probably going to take a hit. So we might be a little weary up until then, and we'll see what they do. But that's going to be the key. Looking at the 10-year Treasury, the U.S. dollar, crude oil, the Federal Reserve balance sheet, and we're going to pay attention to what the Federal Reserve does. Just a heads up, the correlation between the actual economy and the stock market has no correlation at all. The economy is in shambles. Just because I'm saying the stock market is going to go up doesn't mean our economy is good. It's actually the exact opposite. The worse the economy is, the more relief they're going to need from the Federal Reserve. And that relief from the Federal Reserve is what boosts the stock market, which is why the rich people just keep getting richer. So that's what we're going to try to do. We're going to try to capitalize on short-term gains. Long-term, even if the market takes a hit, we can't worry about that. That's the difference between trading and investing. And trust me, rich people invest as well. Everybody looking for these 1,000% returns in 1 month, 2 months, 3 months. That's just not normal. I know that's what's been going on in the crypto market and different meme stocks. That's just not realistic. So we're going to try to find realistic ways to make money. Again, long term, don't worry even about a 10-year outlook. Short term, we're going to try to sell these puts and calls based on the overall direction. If you like what you hear, tune into this channel. Smash Hulk that like button. Subscribe. I'm going to make it my personal responsibility to keep people ahead of these markets. Is to say that's going to happen. I can't say so, but even if I'm losing money, tune into this channel to make fun of me. I'll take that energy too. Just tune into the channel, watch these videos. I'd appreciate that. And let me end off with this. The God of Abraham is real, and may he bless you.
For other kinds of technology, I would say it. And in this particular situation, I would worry that the changes, we're not going back to the same economy. We're recovering, but to a different economy. And it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers who, as Andrew just mentioned, it's relatively low-paid public-facing workers in the service sector who are bearing the brunt. This is largely minorities and women, or skewed toward minorities and women, and relatively low-paid. So those people are going to struggle to get back to work in their old jobs, or in many cases in new jobs. So, I think you'll see more telework. You'll see probably the acceleration of automation. All of that was in the process of happening, but you're going to see much more of it. And I guess that for me, the main takeaway from all of this is that even after the unemployment rate goes down and the economy is, and there's a vaccine, there's going to be probably a substantial group of workers who are going to need support as they find their way in the post-pandemic economy, because it's going to be different in some fundamental ways.